Have you ever found yourself daydreaming, wondering, what if I had invested $50,000 in Dubai real estate 5 years ago? It's a fascinating question, isn't it? Well, today, we're going to stop wondering and start calculating the incredible possibilities. Let's turn back the clock to 2020. At that time, Dubai was a very different landscape for property investors, offering deals that seem almost unbelievable compared to today's market. So, let's go on a journey together and walk through exactly how that initial $50,000 investment might have transformed in value. It's a story of timing, growth, and the unique dynamics of one of the world's most exciting real estate markets. Let's begin with the initial investment. Back in 2020, $50,000 would have converted to approximately 183,000 Emirati dirhams, based on the stable exchange rate of about 3.67 dirhams to the dollar. Now, what could that kind of money get you? With that investment, you could have realistically purchased a brand new studio or even a one-bedroom apartment in one of Dubai's emerging communities. These are the areas that were just starting to blossom, showing immense potential for future growth. To make things even more accessible, let's assume you opted for an off-plan unit. This was a very common strategy back then, where developers offered incredibly flexible payment plans. You wouldn't need the full amount up front. Instead, you'd pay in smaller installments over the construction period, making it much easier to enter the market. This strategy was key for many investors who saw the long-term vision for Dubai and wanted to secure their piece of the pie before prices took off. To truly understand the opportunity, we need to look at the market context of 2020. So, Dubai's property market was at a fascinating turning point. It was just emerging from a period of correction, meaning prices had stabilized and were poised for a significant rebound. If you look at the data, the prices per square foot in many of the up-and-coming communities were dramatically lower than what we see today. It was a classic buyer's market. But there were clear signs that things were about to change. A perfect storm of positive factors was brewing. Global interest in Dubai was surging, fueled by the upcoming Expo 20, which promised to put the city on the world stage like never before. On top of that, the UAE government was rolling out a series of visionary reforms, like new visa regulations, making it easier for people to live and work in the country long term. All this momentum was creating the ideal conditions for explosive growth. Now, let's fast forward to today, 5 years later. What happened to that investment? The results have been nothing short of spectacular. In some of Dubai's most sought-after central areas, real estate prices have skyrocketed, increasing by over 100% since 2020. That's a doubling in value, and in some prime locations, even more. According to leading industry reports, Dubai has actually led global city center property price growth since 2020, outperforming major hubs like New York, London, and Hong Kong. So, if your property was in one of these high-growth areas and it doubled in value, that initial $50,000 investment has now blossomed into something significantly more substantial. It's a testament to the incredible upward trajectory the market has experienced over this period. So, let's put some concrete numbers on this. If we assume a conservative 100% increase in value over those 5 years, your property which you bought for $50,000 could now be worth a cool $100,000. But what if the growth was even faster? In many areas, it was. If your property's value grew by 120%, you could be looking at a valuation of around $110,000 to $120,000, or potentially even more. And here's the best part. That's just the capital appreciation. We haven't even touched on the rental income yet. If you decided to rent out your property, you would have been earning a steady stream of passive income throughout these 5 years, adding another layer of profit to your investment. This dual-engine return capital growth plus rental income is what makes real estate such a powerful wealth-building tool. Let's dive into that rental income scenario. Dubai's residential rental yields have historically been very strong, and the last 5 years have been no exception. For properties like a studio or a one-bedroom apartment, it wasn't uncommon to see annual rental yields of 6 to 9%, and sometimes even higher in specific high-demand areas. So, let us be reasonable and say you earned an average of 7% annually on your initial property value of 183,000 dirhams. That works out to be about 12,800 dirhams per year in rental income. Converted back to US dollars, That's approximately $3,500 hitting your bank account each year. Now, multiply that over 5 years. That rental income alone could total around $17,500. And remember, this is cash flow you're receiving on top of your property's value doubling in the background. Let's put all the pieces together and look at the total return. You started with a $50,000 initial investment. We've estimated you could have earned around $17,500 in rental income over 5 years. Then, let's add the capital gain. If your property doubled in value from $50,000 to $100,000, that's a $50,000 gain. Some reports suggest even higher gains. So let's be a bit more optimistic and say your gain was $60,000. So, you have your initial $50,000 plus $17,500 in rent plus $60,000 in capital gain. That gives you a total value of around $127,500. Essentially, you've more than doubled your initial $50,000 investment in just 5 years. It's important to state that this is, of course, a simplified scenario. Actual results always vary based on the specific location, the quality of the property, management costs, service fees, and the ever-changing market conditions. But it paints a very clear picture of the potential that existed. So, what were the key drivers behind this incredible performance? Why did Dubai's market take off so spectacularly? A huge part of it comes down to the government's proactive and investor-friendly policies. The introduction of golden visas, freelancer permits, and other residency reforms made the city a magnet for talent and capital. Furthermore, the tax advantages, particularly the absence of income tax and capital gains tax on property, are a massive draw for global investors. The city's strategic location, perfectly positioned between east and west, solidified its status as a premier business and lifestyle hub, attracting capital from every corner of the world. And let's not forget the market-specific factors like those attractive off-plan payment plans, which lowered the barrier to entry, and massive government investment in world-class infrastructure, which continuously improves the quality of life and supports property values. However, it's crucial to remember that every investment carries risk, and real estate is no exception. It wasn't all just a straight lineup. Some of the risks in the Dubai market include the potential for oversupply, which can put downward pressure on prices and rents. Delivery delays on off-land projects are another risk. You need to choose your developer very carefully. And, of course, regulatory changes, while recently positive, can always impact the market. In fact, some analysts are now warning of a possible price correction in 2025 or 2026, primarily due to the large number of new properties scheduled to be handed over, which will increase supply. Also, rental yields aren't guaranteed. They can fluctuate. The exact location, the quality of the building, and the current demand in that specific neighborhood make a huge difference in how much rent you can actually charge and whether you can keep your property occupied. So, what if you missed out on that 2020 opportunity? Is it too late? Absolutely not. While the entry point is certainly higher now than it was 5 years ago, opportunities still exist. You just need to be smarter and more strategic. Instead of focusing on the prime areas that have already seen massive growth, you might look for the next emerging communities. These are the areas with new infrastructure projects, metro line extensions, or major community developments planned for the future. Off-plan projects can still offer value, especially those from reputable developers with competitive payment plans. The key is to focus on the fundamentals. Do your homework on the location and its future potential. Research the developer's track record for quality and on-time delivery. Analyze the payment plan to ensure it works for you. And most importantly, calculate the expected rental yield to understand your potential cash flow. The game has changed, but there are still winning moves to be made. So, to summarize our journey back in time, a $50,000 investment in Dubai real estate 5 years ago could have realistically doubled, or even more than doubled, in value. This isn't magic. It's the powerful combination of significant capital growth plus strong rental yields, all happening in the right market at the right time. But as we've seen, achieving these great returns comes from making smart choices, understanding the market drivers, and actively managing your risks. While the best time to invest might have been 5 years ago, the next best time is often now, provided you're armed with the right knowledge and strategy. Thank you so much for watching. I hope this gave you some valuable insights into the Dubai property market. If you enjoyed this video and want more real estate analysis and smart investment tips, make sure to hit that follow button and subscribe to the channel. We'll see you in the next one.